get us kicked off here and pass it over to Dmitri as he's going to talk about Bundil and his experience on Shark Tank. So as a avid Shark Tank watcher, I'm super interested in the behind the scenes, which I know you'll get to, Dmitri, but I'll pass it over to you. Thanks for coming. We're super excited to have you.
Cool. Hey man, I appreciate it. And yeah, thanks for having me, Brad. So today we're going to talk about building better UX for everyday blockchain. So real quick on the agenda, I'm going to have an introduction to the problem, my solution to that problem, which is Bundil. We're going to talk about regulations that are slowing down mass adoption. And then we're going to go inside the Shark Tank, season 10, episode 3. Historically, reaching the masses has been driven by great experiences. Blockchain is no different. And I want to read you guys a little blurb from a book that's coming out this summer that I'm writing exactly on this topic, on how UX is going to further blockchain technology in the space. So a great user experience defines a great product. Everyone remembers a great experience they had, whether that's a beach vacation, driving a fast car, the crisp box opening experience from a new iPhone, or simply just really good tacos from your local restaurant. Everyone understands good tacos, but when I talk about cryptocurrencies and upcoming blockchains, I get blank stares and empty questions. Building the future of blockchain technology requires more than deep liquidity or robust features. It requires user-centric design and these complex concepts simplified. Just one frustrating experience can turn away a potential investor or user from ever revisiting the platform again. Crypto is a decentralized concept, but the information and customer journey should not be. Blockchain is the underlying technology powering the future of tomorrow, but it needs to deliver something that customers want, whether that is faster payment processing, easier investing, access to new and exciting asset classes, or any of the thousands of applications blockchain tech can offer. Today's products bring out too much of the blockchain intricacies to the end user, which hurts adoption of demographics with less technical or financial experience. Open source crypto communities place too much power in the hands of developers and not nearly enough in the hands of product strategists and UX designers. And I want to tell you a story about exactly how I first came across this problem. Back in 2017, I was trading crypto, diving into the crypto world as much as I possibly can. And my mom literally heard me talking about it almost every single day. And finally, she comes up to me and was like, "Hey, Dmitri, I hear you talking about crypto all the time. You won't shut up about it. How do I buy some? I want to support." And obviously, I got extremely excited. I told her, I was like, "Hey, you're going to go to Coinbase. You know, they have the best UI for managing all of the wallets that you're going to need. You'll be able to take in your payments easily. You've got instant buy limits. Like you can do all this stuff. Just go to Coinbase.com and sign up." And a couple of days later, she calls me back and she was like, "Dmitri, I need you to do this for me. I don't understand what a wallet is. I don't know what I'm doing." And that got me thinking. I was curious because I was surprised that she couldn't go through Coinbase's, at the time, amazing UI to sign up and purchase crypto. It was extremely easy. It took about maybe 7 minutes at the most to sign up and get onboarded to buy some cryptocurrency. So I asked her, what was difficult about it? You know, what did she have trouble with? And I started doing research to figure out a way that the average retail investor, someone who isn't technically enabled, someone who isn't financially literate, to be able to invest into different asset classes or just learn about investing in general. And I came across two things. I came across the methodology of dollar cost averaging, a very passive investment methodology where you buy in the highs and lows of a market over time. Because historically all markets have gone upwards over the past 150 years if we're talking about the stock market. And it was a great idea to get my mom to buy every single month. She doesn't have to worry about timing the market. She doesn't have to worry about learning about which crypto she's going to buy. She can kind of just do it automatically. And then I started diving into a platform that I'm sure a lot of us know called Acorns. I saw Acorns. They have automated investment, which uses roundups from your everyday purchases so that you can invest into the stock market as you spend. And I was like, okay, surely there has to be something for crypto in regards to automated roundup investing. And there wasn't. So I got extremely excited. I saw the opportunity right there. There was nothing in the market. I ended up reaching out to my uncle, who was one of the initial investors in Bundil. And I told him, I was like, hey, I've got an idea. This Acorns company is already massive. There's nothing like it for crypto. Crypto is going to be the next big thing. We've already been talking about it a bunch. We got to do this. So at the end of 2017, we started building. And beginning of 2018, we launched on Product Hunt, which is a website where you can launch your product and get real-time feedback, as well as get some potential users if your hunt goes well. Luckily, we were number 2 that day, number 2 upvoted product on Product Hunt. And we were off to the races. We had an MVP built. We had users signing up. And within a couple of weeks, I had a producer from ABC and Sony reach out to me and tell me this. He told me that Bundil was the first application that he could understand regarding cryptocurrency, and he wanted me on the show. And obviously, I'm not going to turn down being on TV. So I said yes. I filled out the 1,000-page booklet that it took to get to the casting. I filmed my pitch video that went straight to the table of ABC and Sony. And I was off to the races. Middle of 2018, I was filming for Shark Tank. And by October of 2018, I had already aired. And it was a very expedited, very fast experience. And I learned a lot along the way, some of which I'm going to share with you today. So first of all, what is Bundil? I'm sure you're wondering exactly what the actual app is. So Bundil is a mobile application that invests your spare change from card purchases into cryptocurrency. The goal of building this application is to make crypto investing simple for everyone. And the way it works is if you go to Starbucks and you buy a coffee for $3.45, we're going to take the extra 55 cents, round it up to the next dollar, and invest it into whatever cryptocurrencies you choose. And this is doing multiple things. First, you're dollar cost averaging into the market, because as you spend, everybody uses their debit or credit card to buy things fairly consistently. At least I would hope so. And as you buy things, you're going to be investing. So you're automatically dollar cost averaging because you're buying on a consistent basis over time. And what this does is it mitigates some of the crypto market volatility. Everyone has probably heard crypto is extremely volatile. It'll go up 200% one day and then down 200% the next day. And this is really a methodology to help mitigate that risk, because you're going to be buying in the highs and lows instead of timing the market by buying in the high and waiting for it to go down. And what's really cool about this methodology is we can apply it to multiple asset classes. So we're not starting or stopping with just crypto. We're going to add fractional shares. So Tesla, Nike, Facebook, your favorite stocks that you want to invest into, as well as savings and NFTs, because we want to empower our users to build a diversified portfolio of assets with the experience that we built. And I want to talk about some of the issues pioneering in a new space like blockchain, because there's issues that have not only affected us as a young company, but many, many other startups trying to build their own tokens, their own blockchain protocols, their own financial applications. And it all comes down to regulation. So initially, back 2018, 2019, there were a lot of scams. There were ICOs where people were promising to build amazing technology, raising hundreds of millions of dollars in some cases, and then people were just taking that money and leaving. And that got the government's attention very, very quickly. So we started getting a lot of different regulatory hurdles if you are accepting payments or transacting with payments at all in regards to blockchain, one of which is information called KYC. So KYC is know your customer information that is required by the SEC and FinCEN to verify a person's identity transacting within a platform. For example, if you were going to sign up for a Coinbase or BlockFi or Gemini or Binance or Bundil, you always have to put in KYC information to verify who you are, to make sure that you are who you say you are, because there's been thousands of scams where people will impersonate someone else, get access to the account, transfer the Bitcoin to some other wallet, and boom, that person just lost their money forever. And what was really interesting about this challenge is we were one of the first experiences to have to build out something like this. Once the KYC information was mandated through our liquidity provider, we had to figure out exactly how to build in that experience without it being jarring to our users. We had to make sure that we were bringing in sensitive information as encrypted and as secure as humanly possible, and make sure that they felt comfortable throughout the experience. And as you can see here, I've actually attached a few screens of what our KYC flow looks like today. And we have a few bits of information that are absolutely required to be able to get KYC verified. One of which is social security number. We've got residential address. We need to see your ID. And then we also have to have your date of birth. And we split this up into basically two flows within one onboarding flow. So you have the initial sign up flow where you put your name, your phone number, your email, your date of birth, and you create a password. And then you verify your phone. That actually gets you set up with an account on Bundil. And then you're automatically prompted to verify your account. You can skip through this if you want to get into the app and see what it's all about. But verifying your account is a way to let our users know, hey, you're still not done. You still need to input some information. We need to verify who you are. And it's just a 3-step process. So once you click social security number, you verify that. It's encrypted end to end and sent straight to our liquidity provider. None of it is stored at rest, which means we don't actually get to see any of this information. So if it's inputted incorrectly, you'll have to revalidate it once that KYC comes back negative. And once you continue to go through, you can input your residential address and then take a picture of your ID, so you don't have to type in the information from your ID. And once you have all that information submitted, you continue to adding your bank account. And this is really important because the reason why we add your bank account after KYC is so that we can match the information that you have just provided to our provider to the information that's on your fiduciary bank account. So on your bank account, they already have all this information. They know your social security number. They know where you live. They know who you are. And we're able to verify this via Plaid to keep the experience down extremely, extremely low. And we're also able to verify within 10 minutes. So a very unique advantage of the Bundil platform. And it took a couple years to figure out exactly how to do this. It did not always look this pretty. The experience was very jarring at first because we didn't understand exactly how to move users through this type of flow. We had to talk to a lot of our users. We had to do interviews. We had to iterate so many times to be able to get to something this polished. And although it's very good, it's something that holds back a lot of emerging fintech and blockchain companies because they may not have the resources to do something like this. They may not have the time to focus on KYC. Maybe they're focusing on getting their token out there or getting their protocol uploaded to the next biggest exchange. And it's really important to pay attention to regulations because those regulations are going to dictate how experiences are built in the future, from fintech experiences like ours to blockchain enabled tokens that provide some type of value on the blockchain. The next hurdle that we ran into, which I think is one of the biggest and one of the most scary, was an advertising ban. So for the past 3 years, any cryptocurrency company, any blockchain tech enabled company, any protocol, any token, any NFT launch could not advertise on almost any platform. There were very specific crypto platforms where you could pay to advertise to crypto specific communities, and you pay in, some crypto or some Bitcoin. But if you wanted to advertise on Facebook, if you wanted to advertise on Google, if you wanted to advertise on Instagram, Snapchat, any of these others, you could not. And it was extremely difficult for young companies to get off the ground. We got extremely lucky. One of the things that we did really well is we focused on providing an amazing experience and focused on making sure that our users wanted to share our platform with their friends and family. So we had great organic traffic. We had some of the Shark Tank brand awareness that helped us through this time, but we could have grown so much more through those 3 years. Luckily, October, November of last year, Facebook and Google specifically actually released their advertising ban. They said, hey, we've kind of caught up to the space. We've got safeguards for all of the scams. And you can now advertise a cryptocurrency product without having to be ultra regulated. Previously, you had to be a registered money services business with the SEC, and you had to have a money transmitter license in every state you wanted to advertise in. Something that is very, very expensive for a young startup to do. And now you don't have to do that. And literally, once the advertising ban was lifted, we saw a 4x growth the first month when we started testing ads. So extremely crazy growth there. But it's a testament to how powerful some of these bigger technology companies that have very wide audiences can steer a market. That's why communities like Discord and Reddit and Twitter became kind of safe havens for the cryptocurrency enthusiasts because they couldn't get their products out there. They had to find a space that they were allowed to talk about the things that they were building. That's why you've got crypto Twitter, and that's why Discord communities are ubiquitous across NFTs and token launches now. It was an extremely difficult time and something to pay attention to when building emerging blockchain tech, because we're kind of at the mercy of these PPC marketing platforms. So next, I want to dive into the Shark Tank a little bit to preface some of the questions that we're going to talk about. I've got 3 questions that I'm asked literally every single time. I want to get those out of the way so we can talk about more fun stuff. So first of all, did I accept the deal on the show? So if you guys did any research on Shark Tank at all, you might have seen that I got an offer from Kevin O'Leary for $100,000 for 50% of Bundil. And we had come in at a $2 million valuation. So he basically undercut us by, almost 90%. And I said yes on the show. And what a lot of people don't know is all of those deals are subject to due diligence. Not to be a spoiler of Shark Tank lovers out there, but about 88% of those deals do not close that you see on TV. And we spent about 6 months talking with Kevin because at the time he's gone back and forth with, him liking cryptocurrency or not liking cryptocurrency. And now he has multiple crypto companies. But at the time he liked crypto. So we were really trying to make the deal happen. And I told him, hey, if you're going to take 50%, you need to do one of 2 things. You need to dilute as a founder. So as we raise more venture capital, you will take an equal hit such as us so that we have room to raise, healthy rounds and to grow the company. Or we need $1 million up front so that we have a solid, start to our round. We can hire, we can grow, and we can have a solid foundation to start off of and use the leftover 50% to grow the company. And he would not do either of those. He kept promising that he would take care of his entrepreneurs, but would not do what was best for the company. He wanted to kind of take our IP, basically. So I said no. I didn't want to go down that path. I didn't want to just give up the idea because I thought what we were doing and the experience that we were building was powerful. And about 4 months later, I raised that $100,000 for the $2 million valuation I was asking for on Shark Tank. The next question I get all the time is, why did they choose Bundil? What was the process like? So you might have heard at the beginning, I didn't go to a casting call, which is typically what happens on Shark Tank. I was reached out to by a producer that was hunting for different companies. And the reason why is because of our experience. As I mentioned, our experience was the first experience in cryptocurrency that they could just understand. It was simple. They understood it. They got it. And it allowed us to be on their platform and show to, the average, retail investor, the average consumer on Shark Tank's viewer base. And then the last question, was there a difference between what happened on TV versus the actual pitch? So yes, if you went and watched the episode, I was actually up there on the episode for I think it was about 6 minutes total. I was actually up there for about 2.5 hours, standing and grinding and coming to terms with the sharks. So one thing that's really cool about Shark Tank is once you step into the room, the sharks have never heard of you before. They don't know who you are, and they don't know what you're presenting. So the experience and the interactions that you get are completely genuine. They do kind of cut in a little bit of fluff and kind of splice things there to create some drama. But that interaction is genuine. And we spent that 2.5 hours diving into specific KPIs of Bundil, diving into some of the blockchain technology that we were building upon, why our experience. So Kevin thought our experience was going to be very expensive to market. He actually is quoted in saying that I'll be astounded in how much it costs to acquire customers. And we spent that time just hashing through everything. And I pitched my heart out basically to get Kevin to say yes. I'm glad I could tell you about a little bit about the experience that we're building, a little bit about why it's important, why it's hard navigating blockchain technology with this type of experience.